Good evening, everyone. All right, so this is my new future strategy grand reveal. No, it's not, fully complete. I still have a decent amount to do, and because there's just so much to talk about, I decided we're going to split this up into two parts. So today is going to be the backstory behind what I've done, why I've done it, and how I did it. And then tomorrow, 3 p.m. Eastern, so that's on Saturday, I will be doing part two, in which we start analyzing. I go through my audit results, um, additional rules, so on and so forth. And yes, it will be recorded. Now, no, this isn't a masterclass teaching you how to do this strategy, but the goal of this is to, one, show you guys what I've been working on over the last 3-ish months, um, show you everything that I've built, and show you the potential of this strategy. It's actually going to be tomorrow. Tomorrow, we're going to go over all the audited results. We're going to do the scalability analysis of the strategy. We're going to be doing a lot tomorrow. So we'll be talking about the potential of the strategy, but ideally inspire you guys to do this and make the investment. Because if you do the things that we teach you to do in the server, which is everything psych related, trading psychology related, and you are willing to spend hours building systems, testing systems, failing systems, starting new ones over again, it's not going to take you more than 5 systems to find one that works and is profitable, especially with where what a lot of you guys are at currently in your trading career. All you guys know technical analysis. You guys have an idea of what's a bullish chart, what's a bearish chart, what chart is more likely to go up versus down. And if you have the psychology, the psychological skills to be able to execute at least a semi-mechanical strategy, you will be profitable, guaranteed. It's just a matter of stumbling upon the right strategy for you. And if you're willing to do this, put in many hours, be willing to change and fail, and start over again, it is statistically guaranteed that you become profitable. Keep throwing enough stuff at the wall, something is going to stick. And that's just not even a trading thing, that's everything in life, entrepreneurial, business wise, anything. Now, a little bit of backstory. Last year, for a majority of last year, okay? So from January all the way to October, I live traded the second hour of market open with you guys on my funded accounts. And it was good, it was profitable for most of the year. And I traded the second hour of market open the exact same that I traded the first hour. I do what I call probability analysis, right? I'm look at all the reasons, or I look at a chart and mentally, within 2 seconds, count up all the reasons why I believe the stock or the chart should go up and all the reasons why it should go down. And if there's an instance where there is a lot more reasons why it should go up rather than down, I will enter calls, and vice versa for puts. That's always been my strategy for trading the market open. It is highly discretionary. I don't have a bunch of documentation for it. Instead, I have years of pain and suffering. I would have much rather just spent a few months back in 2021 or 2022 doing it, so I wouldn't have to, so it would just be easy, right? I'd be a lot richer right now if I did. But that's how I traded. But come October of 2024, the market started changing. As you guys know, we had a very, very, very big election, not just for the US, but for the entire world. And all of a sudden, my first hour of market open, options wise, was okay. It wasn't as good. Lower win rate, but it was still profitable. But around the end of October ish, my second hour of trading stopped being profitable. The market changed, and just the way I did very discretionary, loose probability analysis just stopped making me money. And keep in mind, I was trading that way for more than just all of 2024. I was doing it live in front of you guys for all of 2024. But I was doing it for most of 2023 as well. The same strategy, same way of trading. So that was a very hard transition for me. And October was not a good month for my futures trading. Nor was December. Or I mean, nor was November. December was terrible as well. And in January, I finally quit. Took me too long. But if it's been working for a year, it should only take you roughly 2 months before you need drastic change, right? 2 months back to back, terrible. Next couple weeks starting into the next month, still terrible. All right, we need drastic change. And that's where everything changed for me. So I dumped that way of trading. Took a small break from futures trading for about a month and a half because I lost a lot of money in the winter. A lot of money. There were multiple months where I wasn't even profitable just because that's the first time in my career where I had just the general way I've been trading fail. So obviously, it hurts your psychology, something that's hard to accept because it's been so reinforced for years. And, I wasn't really preachy on the whole back testing, documenting, doing scalability analysis because I haven't needed to personally did it because I did everything through experience, which isn't the right way to go. It's more expensive, takes more time, but it's appealing to lazy people. And so I stopped trading that way in January because I told you guys, I'm like, look, I'm done live trading futures. It's maybe it's me being live, putting extra pressure on me because I've been red. So I'm gonna try trading not live. Not much better when I wasn't live at all. So I dumped the strategy and started to fit in. And in February, I'm like, all right, my options trading is okay. My options trading always kind of naturally evolves with the market. But, when you're trading the first hour is pretty much always the same. Core concepts. Price action chases liquidity, right? Volatility is what I trade in. As long as market opens are volatile and not super choppy, I'm good. And it happens. It's been happening like forever. But the second hour, that's a problem. And I really try to trade futures and options at the same time. I can't do it. I lose a lot of money when it happens. I screw up on my options entries. I screw up my option alerts. I miss futures entries. I miss futures exits, options exits. That quickly, I mean, I've tried it multiple times over the last couple of years because, man, if I can only just trade 1 hour a day and do both options and futures, well, that'd be awesome. But unfortunately, I can't be a profitable and consistent trader doing both at the same time. I just can't. There's too much errors that I make. And I'm not willing to stop trading futures because all you guys trade futures, right? Ever since, what was it, kind of mid 2023, pretty much everyone started shifting from futures to options because it's just smarter and it's what I teach people to do. And if I tell people that they need to trade futures, I'm not going to trade futures myself. And plus, I really enjoy it, right? It's like, okay, if I can make an extra, I don't know, anywhere from $10,000 to $80,000 a month for 1 extra hour of work a day, who wouldn't do that, right? And I'm unwilling to trade options that long because I trade options in the morning. The theta decay's not that bad for me. But in the middle of the day, I can't really trade options anymore because then the theta starts hitting, price action starts slowing down, and the way I trade options no longer works. So that's why I want to trade futures in the middle of the day or late morning. So finally, I'm like, all right, well, I'm going to need a new future strategy. And then I started the backtesting journey. And I started backtesting and backtesting, backtesting. And I put together this strategy here. This was my afternoon strategy. Now, Trump got into office in January. And man, that was a wild ride. From January through March and a decent bit of April, with the tariff talks and everything else going on, the market was hyper volatile, like one of the most volatile markets I've ever seen in my life, like right up there with freaking COVID. Crazy. And I noticed that towards the end of the day, my general concept of liquidity and momentum, right? If price action invalidates a majority of a defined move, it has a tendency of chasing the nearest point of liquidity, which for me would be the nearest pivot. I started noticing that happens a lot in the afternoons. Let's test it. So this is how I started backtesting. I would write the trade on Google Docs, I would copy and paste the arrows. It took forever. Okay. I write down what kind of price target I have, what kind of stop loss I have, what the risk to reward is, the date, the direction of the trade, the ticker, the entry time, the exit time, the P&L, a check mark meaning did I sell in a good place? Right? If I exited for a win, did it reverse after? If I stopped out, did it continue going down? That's a check. X is the opposite. And then what did it do during the trade? How much average ticks did it go up, then down, then up? That way I can document, for this strategy, should I move my stop loss up and down? Now, this was a 5-minute strategy in the afternoon. So it was a much bigger trades, as you can see. And I started actually putting the strategy into effect in February. Late February, last week of February, as I did. And the stats were awesome. I mean, the stats, 55% win rate, $18,420 in profits. And I trade half of that size. March looked great. And this was just one. If I go to others, February was even crazier. Right? And I did March during that time, so March went down. And I made good money with that strategy. I made very good money with that strategy until the end of April. And then I lost 12 days in a row. Finally lost my psychology and lost my accounts. Now, I did get a decent amount of payouts. 12 red days in a row. And being on vacation. That's what it finally took for me to lose my psych. Otherwise, it was great. So, seeing what the backtesting did to my psychology really just made me want to tell everyone to start backtesting because, man, my psychology was damn good for an entire month. I mean, 12 days in a row of being red before a single rule was broken was what I did. And I had my futures accounts last really long, super great, and I knew this was what needed to be done. But unfortunately, the tariff volatility didn't last forever. And then I documented a little bit through May, and I'm like, okay, the strategy isn't nearly as good as it once was, which is fine because this strategy was fairly temporary, right? It was taking advantage of current market conditions, and I didn't like that. Now, I would still, if you paid me 30 grand or however much, even just, I would take 30 grand for 1 week of work, right? Now, even if the more the merrier, right? But I don't want to have to keep making new strategies just to hope that I can make a few tens of thousands of dollars in a month or whatever it is from this future stuff. I need something more permanent. Now, the way I teach you guys technical analysis is I don't just give you guys, boom, a mechanical strategy, a stupid EMA crossover or something stupid, because there's no room for growth. There's no room for evolution, and you guys don't learn anything. But what I do is I teach you guys technical analysis concepts that I know to be statistically true, and these concepts are modular, right? My basic concepts on liquidity analysis, Fibonacci analysis, supply and demand, strength and weakness, patterns, volume. All of these things are modular and can be combined with each other and combined with other indicators to give you solid bias on what's statistically likely to happen next. That's how I've always taught technical analysis. That's how I do it in the morning. And it was really difficult for me to get away from that when my futures trading strategy started going downhill because I didn't, I knew it was the correct thing, but unfortunately I didn't, I didn't have any documentation. This is the first time, what you guys are looking at is the first time that I had really formal documentation with screenshots, entry, exit, so on and so forth, of, beginning and results. All the stats of the trade. So I started thinking, okay, well, I want something more permanent. Something where I can use my probability analysis, but I want to be able to evolve it. Well, I also want it to be fairly mechanical. This strategy was pretty dang mechanical. It was very mechanical, actually. So I want something more mechanical, but the problem is my standard kind of loose discretionary probability analysis just doesn't work for the second hour anymore. It just doesn't. Right? It would not like it used to. Now, according to my data, you may see it may give the illusion that it does, but I don't take every trade that I'm not supposed to take, right? So how am I going to figure, first off, which concepts do I use for my mechanical strategy? Do I start with a liquidity sweep strategy, liquidity momentum, bullish bearish continuation, like consolidation trades, supply and demand? What do I want to do? What do I want to start with? And you guys know I'm fairly good at TA and I teach a lot, and all of my concepts I know are statistically reliable. A little bit on their own, a lot when you mix and match them. So then I had the idea this summer, because I took kind of a break from futures trading kind of in the summer. Why? Because Trade Arena started taking over my life, and I was mostly just trading options. Now that's on pause at the moment. It's been on pause for roughly a month and a half or so because of some issues there. So for those of you who don't know, it's another software company that I'm in the process of starting, and it's a big deal, and you'll hear about it later. So in late July, I'm like, all right, it's time to start building a futures trading strategy again. Plus, I have a bunch of PA accounts on Apex that are untouched, right? I always have between 10 and 20 PA accounts on Apex at any given point. I don't touch them unless I have something solid, like this, documentation. Well, what do I want to do? Well, I knew what I wanted to do initially. And what I wanted to do initially is turn my probability analysis mechanical, because what I've learned is that it doesn't matter how discretionary, it doesn't matter how subjective your trading strategy is. With documentation, anything becomes mechanical. If you typically like setups where, invalidates a majority of the move and there's a solid pivot above and you wait for bullish consolidation, as long as the volume looks good, that's typically the trade that you enter. And that's typically discretionary, because sometimes you don't enter because it's been chopping up, or the volume looks weird, or we are in supply, whatever it is. That's discretionary trading. But with enough documented instances of that almost identical setup, you know the exact statistical reliability of that setup based on your data. So all of a sudden, I have to take this trade, because in the last 10 to 20 instances of this type of trade, it's been overall profitable with a 65% win rate and a 1.2 risk to reward, or whatever it is. That becomes mechanical. And it takes the thinking out of trading. And that's why I push you guys to at least build semi-mechanical strategies, where you have to think about some things, like maybe whether or not to get in, but your PT and stop loss are fully mechanical. Or your entries are mechanical, and your PTs and stop losses, maybe you pick and choose. Or maybe you do a full mechanical strategy, which isn't going to have as good of results, but they work. So that's why I started pushing you guys to do that. And in order to turn my probability analysis mechanical, wow, there is a lot of different combinations of my biases. Because when I look at a chart and mentally tally up all the reasons I'm bullish or bearish, I don't have a list of those reasons anywhere. I mean, it's at least 10. I knew that. At least 10 to 20 different things I can look at. And I know a lot, right? But do the math. How many possible combinations can you have of even 6 different numbers? 6 different variables. It's an insane amount, right? So how am I going to turn this mechanical? What I needed to do was build a library, okay? How am I going to build a library? Well, I'm going to go back in time, and I'm going to trade the second and third hour of market open. 2 hours of market trading, focusing on the second and third hour. So from 10:30 Eastern, 12:30 Eastern. And I'm going to trade subjectively. First thing I'm going to need to do, though, is create a defined list of my bias builders. I taught this in one of the recent master classes, which is fantastic. If you haven't you have not purchased it, you should 100% purchase it. It's super cheap for what it's worth. Anyways, I needed a list of my bias builders, a defined list. I built that. And then I start subjectively trading, right? I start subjectively trading and calling out my trades, and then write what are the good reasons for this trade and the bad reasons for this trade. What are the reasons that support this bias? What are the reasons that don't support this bias? And I start documenting and documenting and documenting. Well, how did I do this? ChatGPT was my answer to everything. Okay, here's a screenshot of what I would do to ChatGPT. I would take a trade, send all the information I did minus how much it went up or down, the screenshots, and then I would tell Chat. I ranted to ChatGPT on my buddy's balcony for 2 hours, telling it exactly my history with trading, everything that I know, all of my keywords, blah, 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 blah. And I pretty much told it exactly what I'm going to do. I'm going to send all these trades to you. You're going to log them in a database. So now when I ask you, hey, what are my best combinations of keywords? It would tell me, hey, your liquidity momentum plus liquidity sweep coming out of demand is your best keyword, 85% win rate. Take that trade every time. That's what I wanted. I wanted to be able to know the stats of each of the combinations of my bias builders so I can begin taking that and building a mechanical strategy out of that data, right? So we build a library, but just because someone builds a library and stuffs it with information, right, doesn't mean you're a smarter human being because the library exists and you built it. Now you have to study in the library. You're using it. So I'm building a tool so that I can go into that tool, go into that library and learn a lot about myself and a lot about my data, a lot about my edge. What trades do I usually take that may actually not be that good? What trades should I start highlighting more? All of those things. Type in chat. Are you guys following me? Good? Okay. So that was the grand plan. And that way, because I knew probability analysis still works fine in the second hour. It's just the win rate's just not high enough right now the way I was doing it. I need to refine it. I need to make it more mechanical. And by refining it, I'll have less setups that I take that have higher statistical reliability so that I can get back to making money in the second hour. And I didn't really want to trade for 2 hours, but I don't know which is better, second or third hour. That's just my window of when I want to trade futures, right? I can trade futures at any time. That's the window that I want. So I started uploading all this information to ChatGPT, and I did all of May, all of it. Roughly 70 trades, 70 trades. And pretty much for me, I documented every decent trade that I believe I had an excuse to enter. Every decent trade that I had an excuse to enter, I would document it, right? And in the first hour of trading, I'd actually enter a lot more of these trades. What I found is typically the trades that are a pretty decent excuse to enter are trades with one more good reason to enter than bad reason to enter. In these reasons, the terminology I'm going to use for them is keywords, okay? Good keywords, bad keywords. Typically, all my trades that I document, I'd find have actually more good keywords than bad keywords, but some of them were like 2 good reasons, 2 bad reasons, but I really liked the good reasons. I documented all those trades, 70 trades in May. But when it came time to ask ChatGPT for data, it couldn't freaking do it. I argued with it for an hour to try to get me to give me data. It did okay. It couldn't get a lot of it. I had to argue back and forth just to find out what a combination of keywords was. Liquidity momentum plus liquidity sweep. Is that good or bad? Oh, it's great, blah, blah, blah. Hey, but you missed these 5 trades. What the heck? It wasn't working. So I knew I needed to create a library, but unfortunately it wasn't working. And one thing that ChatGPT did tell me and that I noticed is, there is a huge edge on trades that have 2 more good keywords than bad keywords. Trades that had 2 good reasons, 0 bad reasons, 3 good reasons, 1 bad reason, 4 good reasons, 2 bad reasons, and then 5 and 3. And everything under that, right? 5, 0, 4, 0, 3, 0, so on and so forth. That's what I noticed. I'm like, this is the edge. This is, now we're starting to become mechanical, but this doesn't work. What the heck am I going to do? Well, I recently built the Aurora website just because we didn't have one. And it was requested by some, I don't remember why I built it. I built it for Trade Arena reasons because Aurora Trading, which is what I do my tech trading and LLC business stuff under, is funding Trade Arena, and Aurora didn't look like a formal business without a website because our website got taken down forever ago. So I built a website for that reason. I'm like, I've been using a lot of AI to build sites. This AI stuff isn't working. Screw it. I'm going to build my own platform that can do what I need it to do so I can get this income source back during the second and third hour. It was built for the masterclasses too. Yeah, the masterclass was a secondary thing. So first I built the front of the website only for, I just needed it for legitimacy reasons and marketing reasons down the line. And I'm like, you know what? We can do back-end masterclass stuff with this too, because I hate having to DM everyone a million times. So I had that. I had the website front end, and then I had a little back end. So I already had a platform to build this library, and I'm like, you know what? I'm going to do it. And voila, here we go. This is what I've built. I'm not going to give a whole breakdown of what it is, right? But it does exactly what I needed to do for my stuff. So I built it. It's forever. And now we can get into the real strategy. So here's my strategy here. I currently have 317 trades and 5 months of completed backtesting, averaging right around 60 trades a month, 60. I have yet to do October. I will be doing that tonight and throughout this weekend. But it's a lot of time, right? I am backtesting 2 hours of market open on the 1 minute time frame, looking at both ES and NQ, comparing them, contrasting them, doing full analysis, and documenting. Pretty much how I trade and how I backtest is I go to the day, right? May 1st, 2025. Jump to 7:30 in the morning, and I just trade. Whenever I see a decent excuse to enter, I place the trade. I write down the keywords. I log it into the journal, and then I see what happens to the trade. I want to keep myself as blind as possible and as unbiased as possible, because it's really, really, really easy to make your strategy bias and start being biased with your backtesting, especially if you have more than a month or 2 months of backtesting. Your first month of backtesting, the strategy is looking fantastic. You're really hopeful. You're seeing the doors to heaven open up on the horizon, and you're getting ready to walk through it. You finally found the strategy that's going to make you profitable, or for me, reestablish that portion of my income. And then all of a sudden, your second month or third month starts going downhill, and you start cheating your backtesting. You start noticing a bunch of trades barely get swept by your stop loss. So after the trade is over, you move your stop loss down a little bit so it didn't sweep and the backtesting still looks good. And you can trick yourself for a bit, but then when you start executing it live, there's going to be a huge gap between your live results and your backtesting results. So that's how I backtest personally, and what I showed you guys is how I documented. Well, the first thing I did is I did my keywords. Okay. You look at the screen, these are all my keywords. You can rearrange the order. Here are the basic ones. Fib rule, not really using that right now. That's under research. PTFAR, not using that. That's under mild research. Here are the big ones. Volume, bear chop, bull cons, which is bullish consolidation, bearish consolidation, weak, strong, trend, continuation on pivot, pattern, liquidity momentum, liquidity sweep, perfect trend line, perfect bottoms, which is triple bottom, triple top, perfect double top, perfect double bottom, missed pivot, demand, supply, and then everything that I just said, other on top of it. So other pattern, other demand. So if I'm trading ES, but NQ swept liquidity, that'll be other liquidity sweep, other demand, other supply, so on and so forth. Those are my keywords. That's what I've worked them down to. Those are the most major bias builders that I have. Okay, now volume is only used in reversal trades. I'm currently researching about including volume in some momentum trades if the liquidity momentum entry was relatively close to the reversal that I'm researching, right? But those are my keywords and my PT types. What kinds of price targets do I take? Did I find my price target by risk to award, a Fibonacci, a supply, a demand, a pivot, the other demand, the other supply, or pattern width? Stop loss types, either risk to award or pivot. And then post exit analytics, X. Did I sell at a good point or exit at a good point? Check. Or did I exit at a bad point? Check. Did I exit at a good point? And it doesn't matter whether I thought it was good, what did price action do after? If I took profits on a long trade and it kept skyrocketing up, that's an X. That doesn't mean I should extend my PT in the future. I'm just gathering data. And then missed green trade. Now I'm using this specifically if the trade that I entered was not a trade with two more good reasons than bad reasons. And while this trade was going on, there was an entry for a trade I would have been properly triggered into via my bias, which is two more good reasons than bad reasons, two more good keywords and bad keywords, and I missed it. So with all of this data and tagging each trade with pieces of this data, I am building the library. Each trade carries so much more information, and this is just the way I'm doing it, right? You guys can use this website to use keywords in different ways. I don't care. But it's a way to tag trades. So now when I am looking at all of my trades, go to filter and search, bias builders. Now I can look at all my trades that have liquidity momentum. Only a 45% win rate. Profitable, but only a 45% win rate, 73 occurrences. What about liquidity momentum plus liquidity sweep? That's a big difference. Profits went from 5,500 to 8,500. Sorry, it's faded in the background. From a 45% win rate or 48% win rate, I don't know, to a 65% win rate. And then from 73 trades to 23 trades. Average P&L went from $70 to $370. That's a big difference. That is exactly what I need to do. I need to be able to pull up. This is what ChatGPT couldn't do, and thank God it couldn't because I wouldn't have this fantastic tool. Within the palm of my hand, I can pull up what are the best combinations of keywords. What are the best scenario filters, right? What is the best of everything? And what are also the worst keywords? You know, is this a terrible keyword? Continuation on pivot, which is here. 38% win rate. What about when I go against the trend? 54% win rate. Okay, that's not terrible, right? But beyond that, I have my scenario filters as well. So I can look up, each trade has keywords assigned to it, which is this ratio here. 3 to 1, 3 to 1, 4 to 2, 3 to 1, 4 to 1, 2, 1. This was a lot. 2, 1, 4, 1. That's this ratio. Green trade, red trade, so on and so forth. But when I click the drop down, I see all the other information. Profit target distance, stop loss distance, risk to reward. What kind of PT was it? Other pivot. What kind of stop loss was it? Pivot based. Post exit. It continued after I sold. Good keywords. This was trend plus liquidity momentum plus sweep. Going against this was demand. As you can see, this was a bearish trade. Liquidity momentum. I didn't review May though, by the way. So anyways, trend, liquidity momentum, which I don't stack those. That'll change. Going against demand. Right, I'll swap that for bearish chop. And that's the result. So any of these trades, at a glance, I can look at the keywords, I can look at the screenshots, I have the data. So when I go in here and say, you know, I only want to look at trades that are against the trend, which are typically going to be my reversal trades. I have 8 here, and then I can look. What are the overall stats? 75% win rate in July, which is crazy. But you got to keep in mind, I don't take all the trades against the trend. I only take pretty much when there's liquidity sweep or at least there's a decent amount of reasons. Now, July was unusually good for reversals. But anyways, I have all this data in the palm of my hands now. So now this is my library, and I even implemented AI into this. So I can ask AI to analyze my keywords and give me the best combinations of my keywords and scenario filters. Well, here's the magic. All trades, 49% profit percentage, 317 trades, which is a massive amount, roughly $35,000 in profit. Just using basic probability analysis. I enter if I have a decent excuse to enter. Does this have one more good keyword than bad keyword? Of course, a few of these trades do have the same amount of good keywords and bad keywords. 30 of them do out of 320, so roughly 10%. But I added them because there's a decent excuse to enter. I would entering would cross my mind. Like I would analyze the setup, and then I would find, you know what, it's actually even. There's 2 good keywords, 2 bad keywords, so on and so forth. And one thing you'll start to notice is as I click trades with 1 less keyword, you're not going to see that. What about, because I don't really do those often. But what about 1 more? 1 more good keyword than bad keyword. Look at the stats. 106 trades, 31% profit percentage, minus $20,000. Over the course of these 5 months, July was a little profitable because those reversal trades, right? This was the issue with my futures trading. These kinds of trades weren't playing out as often as they used to. They do in the morning, a decent amount. Most of them play out in the morning, enough for me to make money. It literally stopped making money last winter. And I don't have the data of last winter, and I still need to audit May and whatnot. But you see that May was the first month back testing. So we'll talk about that in a second. That'll probably come down to like minus 5,000, minus 6,000. We'll see. But still very negative, very low profit percentage. That was my issue. Let's look at all the trades with at least 2 more good keywords and bad keywords, which means all trades with 2 more good keywords, 3, 4. Look at the difference. And obviously May is a lot, right? But then again, May was moving a lot more, so I still need to audit it, right? April was moving a ton. Early this year was moving a ton. So these huge numbers because the market was literally moving more. The losses and losers were big. So the win rate was still normal. That is a big difference. That is my edge. 60% win rate. Average trade, every single trade I place, 291. Right, with this full size, 2 ES, 1 NQ, I trade half that. And only 180 trades. It's a lot less than 320. You can refine that a lot. That's where my edge is at right now. Type in chat, does that make sense? And do you guys have any questions about how I have arrived at this point? Everyone following me? Everyone good? Yes, no? All right, sweet. So that's how we arrived at that point. These are my stats. Now, here's what I'm doing now. Obviously, over the last few months, in the beginning, when you start a strategy, there's not as much clarity. You don't have as much experience with the strategy. There's a lot more gray area, is what I call it. There's a lot more gray area when you're starting a strategy. So first, you get your base documentation together. For me, that's this amount of time. Really, 3 months is what I recommend for most, but I'm planning on... This isn't just my strategy. This is my library. This is a place where I go and I look up, hey, what are the stats of this specific trade during this time of day? So this documentation, this strategy, the second, third hour probability analysis backtesting, this does not say second, third hour probability analysis 2+ keyword backtesting. Right? This strategy is not for that. This is just my library. This is where all the information is. So now I can come here, and if I want to build a different strategy during this time of day or look up a specific time of trade, I can do that. I can look up, you know what? What are all the trades with, let's do demand as a good keyword or trades with supply as a good keyword. Here's demand as a good keyword. 16 trades, 81% win rate if demand is a good keyword. It's almost like the indicator is not a scam. And I'm very unbiased too. Very unbiased when I'm doing this. No intent. No, there's no alternate motives or supply going against it. Drops the win rate a little bit. Supply actually doesn't really add anything. Oh, sorry, that's weak. That's not supply. Where's supply at? 1 second. Supply is okay. Supply is right here. Supply adds an extra couple thousand, decreases the win rate. Now I know. Supply and demand. Well, let's see when it's actually bad. What happens if trades have demand or supply as a bad keyword? Demand as a bad keyword, 48% win rate, still profitable, okay. And supply is a bad keyword. Not that bad, but that's because a lot of those trades that I take happen to do this, right? Happen to have 2 more good keywords, 3 more good keywords, 4, so on and so forth. And if it has 1 more good keyword, wow, that's an issue. And if I do 0 keywords as well, that's not going to help. 41% win rate, 39% win rate. So I can at any moment just look up how effective are any of my biases during this time of day. So this is the library. Now what I'm doing, I finished 2 months today, and it took me all day to do it. I'm going through every single trade. Every single trade starting in June. I didn't have May because I only just now did the screenshots. Because obviously my usage of keywords is different. It's evolved. I've grown to learn more. It's evolved over the last 3 months of real life time to what it is now. I learned that, you know what, I don't stack trend and liquidity momentum anymore. It's redundant. I've also noticed some issues. I have some conflict between when price action is chopping bullishly, do I use that as one keyword? Or if I'm entering during the bullish chop, do I do liquidity sweep plus liquidity momentum, which is 2 keywords, and that huge difference drastically sways whether or not I'm able to get in during that situation. And that situation probably shows up at least once a week. Now, I haven't figured that issue out yet. There's another issue that I'm going to figure out, or gray area, not issue, gray area. Usually I only include volume as a good keyword in favor of a reversal if I'm taking reversal trades, but I notice there might be an edge if I use volume with liquidity momentum on the reversal that caused the liquidity momentum. See, these are complex questions, and without this software, I would have no way of answering it. You guys see how significant this is? Like I would have no way of answering these questions, and I wouldn't even know to answer these questions until I have this. And over the course of months of my real life time, I'm doing this every single day. I'm like, you know what? This is starting to be an issue. Otherwise, if you're just trading subjectively, you don't care. You'll make up reasons to be in and make up reasons you shouldn't be in. It'll mostly be driven by bias. And after the fact, if it was a red trade, you'll start being biased. Maybe I shouldn't have been in. You spawn in 3 more reasons why you shouldn't have gone in and try to change based on your last trade. No, now I'm able to make strategy altering decisions based on months of data on a moment's notice. So it's a really big deal. So those are a couple of issues that I'm working out. And right now, like I just said, my use of the keywords is a little bit different. It's a little bit more evolved than what it used to be. So now what I'm doing before I go through October, I'm going through every single trade and I am editing the keywords. And you know what's funny? All the way back when I was doing June's back testing, which was in August, a lot of the keywords needed to be edited. They weren't 100% accurate to what price action represented. Where they weren't 100% accurate to what my bias represents. So I'm going through that trade by trade and auditing it based on my new information. And in June, it's funny. June's plus 1765 with no filters. That didn't change. But with these filters, June used to be plus only a few thousand. Now it's 8,200. And you know what's funny? There's quite a few green trades that I'm not able to enter anymore because I took away one of the good reasons. But I'm finding that's not actually affecting my stats in a negative way at all. And after I'm done with this audit, now I can wholeheartedly say that this extensive documentation is absolutely unbiased, and every single trade is 100% accurately represented by the keywords attached to the trade. Let's do this. Notes. I'm going to look up every time I said edited. Just in these 2 months, these are the only 2 months where I started doing this. I type in the notes section of every trade that I edit in any way. I write down edited in all caps, the keyword that I removed, the keywords that I add, whether they were good or bad, and any notes about the trade. Anything I changed at all. And you can see that in just 2 months, I edited 59 trades. Almost 20% of all the trades I edited. And that's something we don't really do with our backtesting much. And I never even really thought about doing something like that until I had this platform, because I wasn't really able to do it easily. But now I can. So you go 59 trades edited. Still overall green, not the greatest. It's an okay one, right? Right? Look at the risk to reward. So that's what I'm doing right now. I'm going through and I'm auditing every single trade, looking at the screenshot before I look at the keywords. Obviously, it's hard not to see some of the keywords in the P&L, so I try to be as unbiased as I can. And I determine, are the keywords flawless? Do they accurately represent the trade? Because when I want to look at my stats, I cannot be misled. My stats cannot give me false hope or false pessimism about what to expect from my futures trading moving forward if I follow this strategy. If this is going to be my Bible, that I, every single day after my futures trading, I compare my futures trades to and say, should I have entered this trade? This is the golden standard. And I need to make sure that golden standard is 100% authentic and up to date as far as the keyword usage. And what you're going to find is as you audit, you're going to start finding some gray area, right, that need to be worked out. So for all trades that have some gray area, I'm going to remove edited, and I'm going to type review. 39 trades, 15 trades in June, 5 trades in July, 3 trades in August, and actually 16 in September have review in the notes. NQ didn't miss pivot close enough for the keyword, in my opinion. ES strong is debatable, but too recent. Review NQ head and shoulders, though. So after I'm fully done with auditing, I'm going to go back through all the trades that I tagged with the word review in notes. Super easy to do it. And I'm going to go through the trades and work them out. And then some of those trades will be the special cases. Volume plus liquidity momentum question mark, or liquidity sweep plus liquidity momentum, or just bull chop, or bullish chop plus liquidity momentum. See, I try really hard not to artificially stack keywords. I want them to be accurate. I don't want trades to be 3-0 or 4-1 trades that feel 2-1 or 3-2. I don't want that. I want the trade keyword count to match how I feel when I look at the chart, because how I feel is from 5 years of trading experience. I just need data that accurately represents exactly how I feel and how I'm supposed to feel when looking at a chart. And so far it's working. So that's what I'm going to do. I'm going to finish auditing all the trades. I'm going to go back through all the reviews, work them out with my gained knowledge. And as you work through trades, you start memorizing a bunch of stuff and seeing what's better. And then for the stuff that's conflicting, I can see what keywords are on that trade. I can test it against all the other trades with that keyword and make some, Council of Nicaea freaking decisions when it comes to this strategy, right? Which are going to be very big decisions moving forward, but I'm able to do it. And it's only because I've spent a lot of time documenting and backtesting. I'm not saying you guys should, go this all out. But I'm trying to explain to you guys exactly what my strategy is moving forward, how I did it so that you are inspired to do something like it. So here's the grand plan of this strategy, and here's what to expect tomorrow. By tomorrow, hopefully, it's so much work, but hopefully, I'm not going to do October, but hopefully I'll be done auditing all the months. So now all the months are very accurate data, and the review trades, they're going to be small. They're going to be not very impactful to the overall data, and I can work those out eventually. Or just the remainder. I am going to show you guys the results. And then I'm going to perform scalability analysis, which is this absolute beautiful tool that you guys don't even know about. This started as a chart, and this chart perfectly mimics price action. If I put a filter on this, look. Bias builder, let's do strong. 43%, look. This mimics it perfectly. When I click this launch strategy scalability analyzer, now I can simulate funded accounts. I can simulate apexes or top steps drawdown. I can apply standard sizing so I can change all my trades are documented as 2ES1NQ for easy math and whatnot, even though you don't need to do any math because this system does it automatically. I can change the filters and actively see, okay, which filter combinations result in the least amount of accounts blown up and the most payouts. I can do that live now. We'll be doing that together tomorrow. So, auditing, scalability analysis, because this is just a library, guys. You guys got to keep in mind, it looks like, you know what, Bryce, just your regular discretionary trading is profitable. 35,000 in 5 months. That's not bad. 49% win rate. That's not bad at all. Well, guys, I purposely do not log trades that might have one more good reason than bad reasons, or they're the same, but I absolutely wouldn't enter them. And my analysis is good, so there's a lot of trades I avoid each day. A lot of trades I avoid each day. I mean, if you do the math, I'm only averaging, without any filters, 2.5, 3 trades a day. Right? No, roughly 3 trades a day on average with no filters. That drops a lot more to just 1 to 2 trades, like 2 trades a day on average if I apply the filters. So you want a strategy that has a high win rate, but you don't want it that rare. You want it ideally have a couple of trades every single day, no matter what. Obviously, some days you're not going to have any. Some days you're going to have 6, right? But you don't want your strategy so rare that if you mess up and miss a trade, it's going to ruin your psyche. That's what happened to me in the afternoon. The 12-day with the old afternoon strategy, the 12-day losing streak that I went on, a few of those days were avoidable if I did something a little bit different. 2 of those days I just missed out on the entry and couldn't enter anymore. And that was an error. And then the final day I missed the trade and I couldn't accept it. Right? So if it's rare and you're only getting 1 trade a day or 1 trade a week or whatever it is, it's going to be really hard to accept when you make those errors. And you're going to make those errors not very often, which means you're not going to be learning and growing as often. So I want a happy medium between not a ton of trades, but enough trades to feel like trades are not scarce and I need to worship and cherish every single trade. It's easy for me to not be attached to each trade. So yeah, so after the scalability analysis and analyzing keyword combinations, I'll let you guys do that. And I start trading this live. I'm going to do October, November, December, so on and so forth. I'll probably do this entire year, to be honest with you guys. I'm going to redo this entire strategy, but now I'm only going to document trades that fit the criteria of at least 2 more good reasons than bad reasons. And I might blacklist some trades that fit that category but don't work. You know why? Because I have this good little tag on my trades called Missed Green Trade. And it's a post-exit analytics. This should not be that way. Okay, this is... Yeah, I got to update these filters. Stop loss type. I'm going to apply updates. This shouldn't be good, bad. But anyways, I have at least, and this may not be an accurate representation, but I have at least overall, and again, I need to update it. I need to finish auditing too because I only started using this feature as of late. But what I'm seeing is at least a few trades a month. Oh, for some reason, every single one of them are green, which isn't correct. Roughly, I have about a dozen or so occurrences, at least a few of them a month, that I entered because I could have been triggered in. It was 2-1. I'll still document it. But during that trade, it actually was a 3-1 entry later on, and I missed it. So I noticed that a few times a month, I'm missing out on a green trade with this library. So I use this library somewhere I go to for data. And then I take that data and I make a new strategy just dedicated to that kind of trading. Does that make... Type in chat. Does that make sense? So this is going to become even a lot better, or decent amount better, because what's my average trade P&L? My average trade P&L, not win or loss, my average trade P&L is roughly $290, okay? A dozen trades, at least a dozen trades, probably more than that, it's probably 15 or so. Let's just say a dozen trades that I missed out on. Math says that's $3,000 I missed out on. And maybe a boost to the win rate, maybe not, right? So that's my final thing that I'm going to do. That's my final stage for this strategy is I'm going to take the information from this library and I'm going to redo every single month only looking for trades that I'm properly triggered into by this strategy. And if I want a new strategy for this time of day, I can come back to here and I can build anything, any strategy I want for this time of day. This is everything. This is all of my knowledge, technical analysis wise, pretty much on paper. Everything that exists in my mind as far as probability analysis, so on and so forth, it's on paper. All of these trades. And you can see the difference in some of these when I don't apply the filters versus when I do, right? Much less bright green days, more bright red days, so on and so forth. But all of this data is super, super valuable. And I implore you guys to start taking your trading career seriously and treating it like if you do this, you can make tens of thousands of dollars a month just from 5 funded accounts. 5 funded accounts, 1 payout on each. That's $10,000 in a month. Not hard to do at all if you can keep your psych in order and you have a documented strategy like I do. So once I finish October and I do the scalability analysis with you guys, now I'll have the plan and I'll start executing this strategy and actually scaling up my accounts, right? Because I have a bunch of accounts and do it according to the plan and see what the results are. And in the back end, I will be going back in time and retrading all of these days, which is a forever amount of work, with just a strategy. And now I have an accurate, this is pretty good, but now I have an accurate side-by-side comparison. This is how I trade live. This is how I back tested the same day. What's the difference? I can still do that with this library, but not as much because there's a bunch of trades. I mean, I'm only triggered into 180 out of these 317 trades. But because I built this library, I thought I was triggered into way more trades than I actually was. So that is the grand plan. It's all valid data. You know, if there's only that's the problem, Munchies. You know, if you combine keywords and you only get 2 examples in 5 months, and they're both green, I would say that's pretty profitable. Depends how specific the setup is, right? The more specific the setup, you know, the the less it's going to happen. So the less data you're going to have. But I mean, you're covering 5 months, so it really puts it into perspective how unique a setup is. Type in chat, any of you guys, think of a setup that I may trade, and we'll see what happens. Just cover the part of the screen that has keywords when you try to guess them. Yeah, I do. I just squint. Bull flag, so bullish consolidation. We'll actually do bearish consolidation first. All right, here's what we're going to do. We're going to do bearish consolidation first. I'll show you guys why. This surprised me. Bear cons. 12 trades. 58% win rate. Not that great, though. Pretty much a one-to-one risk reward. Let's do, and there's not as many as though of those because we've been in an uptrend, right? What about adding trend to it? Okay, when I add trend plus bearish consolidation, like I'm trading bear flags and bear pennants after a drop, it's an 80% win rate. Let's go to bullish consolidation now. Bullish consolidation, only 47% on its own. Let's do bullish consolidation, but within my scenario filters. So bullish consolidation with just one more good keyword than bad keyword. 1175. But let's do 2, 3, 4, 5. It's okay. It's not that great. It's barely profitable. I have no instances of bullish consolidation in July within the scenario filters. Most of the time I have bullish consolidation. It's just, you know, here. A lot of small wins too. But you can see 55% win rate, only $121. For me, that's half size. Here are your trades. Not as great, not as often. You also got to keep in mind during this time of day, there's not as many breakouts and stuff. But anyways, yeah, that's bullish consolidation. So profitable, not much though. Supply and demand, I already did that. What about, we'll do this. We'll pick trades that are against the trend. And then if we only do roughly 50% win rate, if we add the keyword filters. So trades that are against the trend from all my filters are 59% win rate. But if I just do 2 more good keywords and bad keywords, that's a dead on 50% win rate. That's not very good. But trades that go against the trend that have 3 more good keywords, 100% accurate. And I can do the same with liquidity sweep. I can do the same for any of these, right? Oh, sorry. I was looking. Sorry, wrong data. The scenario filters was altered. There you go. 35 trades against the trend. Now let's do. Yeah. We can do trades with liquidity sweep in favor. 60% win rate. Keep in mind, though, this is biased because I'm not doing every liquidity sweep I see. Just ones that could be a trade. And now if I do it with my scenario filters, see 16,600, 50 trades. 50 trades, average $330 a trade. Do my scenario filters. Look at that average P&L jump. Look at the win rate. Liquidity sweep with same good keywords as bad keywords, 33% win rate. One more good keyword than bad keyword, 44% win rate. 2 more good keywords, 70% win rate. 3 more, all the way up to 78. That alone has a 100% win rate. and 4 more keywords back down to 75. 28 trades, 16,000 average of $570 per trade. Average win at 944. Most of it was in May, though. Keep in mind, it is skewed because May was such a freaking huge month with the end of the tariff stuff and sweeping. But yeah, liquidity sweep, that's a big one. You can do liquidity momentum too. That's a very big one. 45% on its own. Start adding the scenario filters up to 48, up to 57, up to 61. Look how clear you can see the edge forming, right? This is exactly what I wanted, and I am beyond happy. And this, I mean, what I may do is I may just build out this entire year as a library and have multiple years of this kind of just general probability data. I mean, I might do a library for the first hour because this is literally gold. Like, I am holding gold right now. Like, this is such valuable information. There's nothing on earth that's as valuable trading wise than this, to me at least, except the Mark Douglas stuff, of course. But anyways, what are your guys' thoughts on this strategy so far? And do you guys understand the plan of what we're going to be talking about tomorrow and moving forward? Because tomorrow we're going to be talking about how I'm going to execute it, how I'm going to scale it, all of those things. And you guys are going to get to see that indicator in action, or this scalability analyzer. I know you guys can glaze the tool, but come on, 320 trades, and each trade, I mean, I can't even... Let's see if AI can even answer this question. I don't know if it can. I haven't traded this AI much. Okay, there you go. Yeah. I have logged 1,836 keywords with 640 screenshots so far. The platform is cool, but it's only as cool as that you actually, get to. If you don't use it, then it's worthless, right? But the amount of work that I've not only put into building this platform, but the work that I myself have put in to using this, beyond valuable. Like, such a big time investment for me. And because I developed this entire website myself, I've only spent a few $1,000s on development, I think. Not much at all. But yeah, a ton of information and more to come, right? October will be another 60-ish trades, as will November, December. And I promised that I would never sell a course, but at some point, we'll talk about that another time. We'll talk about that another time, about building a potential platform where you can sell just strategies and documentation and whatnot. It's valuable. If people want it, they can buy it. But I'd consider selling this information at some point in the future. But anyways, yes, type your comments in chat. Comments, questions, anything else you guys have, because that's it. The yapping is done. You guys have the full scoop on what this strategy is. And tomorrow we will get into the more fun stuff. Well, Munchies asked, what if you added a feature where the backend server code creates a list of every possible keyword combination and calculates the P&L of those combinations and then returns them to you on the front end? I already have that, Munchies, and it's this AI right here. I just asked this AI what are my most profitable combinations. But as far as all the possible combinations, I can't have a backend code that does that, because you're like, the amount of keywords I have, you're in the quintillions. It doesn't even make sense. But I'm training, the AI's really good with the scenario filters and whatnot. But this AI that I have built into mine can do all that. It can even read your screenshots and stuff, which doesn't really do much. But yeah, that's another thing. All right, but no more questions, no more comments, anything like that. All right, sweet. Well, I will see you guys tomorrow for part 2 of this session. I don't think I'm going to delay it, but you never know. If I find out that, I really want this extra data or this thing solved before I meet with you guys again. There's a chance we could postpone it to maybe Monday, but I highly doubt it. So expect it tomorrow. And like always, stay tuned. I'll keep you guys updated. I still have more bugs on this site to fix and a lot more data to audit tonight. But all right, you guys have a blessed rest of your night. This is recorded, and I'll see you guys tomorrow.